This is a bullish market. Bullish markets look for any anomaly to go higher. Good afternoon, everyone. Eric Relph with CommStock Investments. We're going to do this a little different this afternoon. I've got kind of a bandwagon of people joining me here. Joe Camp, Justin McKinney, Zach Hooker, all with CommStock as well, as most of you know, because you've probably seen us all on this channel at different times. Joe is out of Bloomington, Illinois. Justin is out of Rochester, Minnesota, and Zach is our newest member, and he is out of Alt, Colorado, which is near the Fort Collins area, because none of you will know where Alt, Colorado is. But we've got a lot to unpack here. The week recap, kind of an ugly one in the grain markets for sure, and then some news coming out late week on all fronts. I just want to kind of get your guys' opinion. What's your clientele feeling about what the grain markets did here today? Joe, start with you.
Well, finally, a bit of a recovery. You thought about, will it be a turnaround Tuesday, starting the week off like we did on a negative note? And then, okay, you get a couple of days. Usually we can try to bounce on Wednesday, and we did not. You broke down to various new lows for corn, right up against $4. Soybeans not far from 10, and Chicago, Kansas City wheat already back towards $5. So it was a hurry that it occurred this week. We dropped like we did after just to close last week, being back at the top end of these ranges. You come into the weekend and a little bit of semblance of calmness, relatively speaking. But now, of course, left to the weekend, and we know how volatile these weekend inputs have been. We'll see what happens over the course of Saturday and Sunday, and then, of course, be ready for Monday, big crop report day.
Yeah, similar sentiment, Justin.
Yeah, looking for a spot to lay some hedges off moving into this new crop. I feel most people feel that they're under hedged moving into the new crop. Any rally's welcome. I still have the concern about the report, but where I'm sitting, we are unbelievably wet. We've been just hammered with rain for the last 2 weeks. I know, be careful what you wish for, because it might actually come true. But we're very wet here. Beans looking very poor. Rose canopied, so it's hard to tell. All in all, nice little finish to the week. Look forward to next week. Hopefully we can move on some momentum there and look for some spot to get these new crop hedges off.
Well, we're kind of in a garden spot right here for sure. We've had good, even moisture throughout all of this. A lot of people have had moisture. Zach, you're by far in the driest spot of any of us. I grew up in Western Kansas, so I know kind of how things work for you in Eastern Colorado. Are they even turning sprinklers on at this point, or has the heat overran the rain, or are you still in pretty good shape out here?
Yeah, so it kind of changes week to week. I mean, we had a very, very wet spring, and then 2-3 weeks that were hot and dry, kind of our normal, what we expect for the beginning of June. By the beginning of this week, we kind of got back into some cooler weather, and so it kind of depends day to day, week to week, as to whether sprinklers are going, whether pivots are running. But we've got some hot, dry weather in the forecast, and I think that's we should continue to see irrigation continue as we move into our normal July weather.
And you're falling right off the edge of that high pressure ridge system, so I think you're going to have a little different experience for a while than the rest of us, so we'll see how that shakes. Joe, can you dig into what we're looking for on Monday? Because obviously we've got major data points coming out, acreage report along with quarterly stocks. Give us your take on that from your merchandising background, and now, of course, on the brokerage side of things.
Well, that's the thing that I point out is that you call it crop report day, but it's two really big crop reports. We think a lot about what to expect for the acreage update, but we can't forget the quarterly stocks update and what that can tell us. And if I could show on my screen the estimates, we'll start with the grain stocks report coming out, the average trade guess on the left, your ranges, relatively tighter ranges, which is normal for this quarterly update. We got to remember we're just finishing off the third quarter, right, of the marketing year. We're entering the last quarter. The acreage report does a lot to shift our focus towards this crop ahead, so we'll talk about that. But go through these estimates. Corn, 4.64 billion bushels left. That would be down a touch from what you see in the rightmost column from last year. Soybeans up just a touch from last year. Wheat up quite a bit. Now, corn and soybeans in particular, and we're in the third quarter for corn and soybeans, first quarter now for wheat, but you can tell a lot about disappearance in this report, or what kind of demand you went through over the previous quarter, for one, and that can inform changes that will eventually show up on the balance sheet. Questions like, okay, if there's less than expected left, maybe we're still hammering so much better than the USDA has given us credit for on this export program for corn. And that could be still another subject of revision in the later WASDE report coming up, I think July 12th. The other component would be, all right, if it's about as expected and you're still high on exports, does that mean we're going to likely see a cut in feed and residual? And you can kind of flush those things out from what we see on Monday out of the stocks report. But the other key component of this stocks report is you get a look at who's got what, not just the total inventories, but how they look in terms of change relative to a year ago in the hands of farmers, on farm, and then off farm commercial inventories. And that's been a subject of these reports of interest, because with corn stocks down from a year ago, we see that they're down by a lot more in the hands of farmers, and they're up a lot more than a year ago in the commercial position. And so you can say things too about how much more active the farmer selling might have been, and say things about who might still hold this position going forward. You see the guesses here. If we're near the top end or the bottom end of these ranges, maybe it's a little bit different, but I'm not seeing that any huge surprise just yet. I don't know if you guys got anything that stands out on the stocks report coming up, or you think it's all about acreage. I don't know.
I think the stocks is where we could hold the biggest surprise. I think not only stocks, but particularly the soybean side of things as a whole, not just on the stock side. But these quarterly stocks reports can really hold some wild cards and be market movers on the right report. And I think the USDA has continued to overestimate last year's crop to an extent. That's just a personal opinion. I also feel like they're undershooting exports by enough that it matters. And those things could be reflected.
Yeah, you can't forget about the top billing. As everybody knows, it goes to the acreage update, because we're so much shifted already in terms of attention to what's ahead, what was just planted, and how it's going to look eventually going forward. A lot of that rides on these acreage estimates, a lot of numbers here for all of the different crops. These are tables, I know just you included them in the morning report. You want to sift through the specifics. You can access this within the CommStock report, but we'll focus in on mostly corn and soybeans here. I mean, there are interesting things to say, of course, about cotton and how these acreage expectations have just gone lower and lower. And generally what we could see in terms of prevent plant or acreage switch decisions in the Mid-South where they've been so wet, or the Delta, which has been historically wet through a lot of the planting season. But for corn and soybean, the thing that stands out for me on these estimates, you see the average trade guess, 95.35 million acres of corn. That's up just nominally. It's basically even with the March survey intentions estimate. And similarly for soybeans, up just barely, 83.65 compared to 83.5 million in March. This was somewhat of a surprise for me. I thought these estimates were going to be a whole lot higher than they were. And you think that maybe the rest of the trade has also dampened their expectations a little bit over the last month, which I have. Of course, it just feels different than it did a month ago when we were thinking about so much extra corn acreage. Not that we don't still have a lot, of course, at this number, but you can see where the bounds are, and the relatively wider ranges from 93 3/4 to 96.8, for example, on the corn. You get close to the top end, and certainly that's bearish. And you can see how if you're anywhere near 94 or certainly below, as some analysts have predicted, and that's got to be a bullish outcome in my mind. What say you guys?
I'll say what I was peeling back on this report, I went back and looked, just using the average trade estimates, you're looking at about a 178.8 combined corn and soybean number, depending on where we fall in. That would be up quite a bit from last year. You're looking at about a 1.2 or so higher than last year, which we did experience some heavy prevent plant in the western part of the belt. But, what do we end up with on the southeast side of the belt, the Kentuckys, the Ohios, places like that kind of struggled this year? Well, the risk is always we come in with a 96 million acre and an 84 bean number. Overall total planted acres, again, I know we're probably going to pick up some cotton acres. Cotton acres are going to be down. But that would put us at about a 178. And I think that's pretty close to probably where the market is trading at right now.
So if we do come in kind of really close to the March estimates, and that's where the trade guesses were, you got to think then it is really quickly just on to weather and yield prospects, right?
Yeah, absolutely. But I think total corn and soybean acres, if there is a surprise, we could see something there. we'll have to peel out each individual thing as it comes out.
Well, moving over to the other side of the markets, we're going to start with the cattle and then go to hogs. But starting with the cattle, today was unbelievable. I think I titled the afternoon broker comments, Cattle Grow Wings, because of the strike talks with the Amarillo Tyson plant specifically. We traded, $4+ higher in the feeders, 3+ in the fats, even though we were seeing lower fed cattle cash. Feeder cattle cash has been robust throughout. That's never changed. Obviously, the cattle feeder is bullish the market, and looking at the fundamental statistics, you about have to be. But Zach, I know you've dug into a few things here recently, and obviously the strike is kind of a breaking thing that's just been in the last 24 hours or so. What are you thinking? What are you looking at on this cattle market right now?
Yeah, I mean, the strike, I think there's, several things, right? I mean, you've got the Amarillo plant with workers going on strike. And I know talking to customers, it's kind of been a question throughout the summer of what is the breaking point going to be? When is it going to come? And the thought has kind of been that it was going to be plants are going to close because packer margin has been so poor, right? I mean, they've been in the red. That's all we've been hearing. And then recently it's been, what I think as of this morning in your report, Justin, you wrote we're positive 30, or Packers were positive $30 ahead. And so it kind of seemed like they were starting to round a bit of a corner. And one guy that I spoke to today was actually thinking, gosh, maybe we're looking okay as we head into August. And that was a gentleman who kind of August had been his target for when we were potentially going to take a turn south. So not entirely sure what this is going to hold. I know there's also some other question marks in terms of some other plants. Justin, you had mentioned, was it a Green Bay plant or a plant up further north that was potentially facing some closures as well?
Grand Island, that story was out yesterday with high water and flooding potentially slowing them down. Today, losing a little bit of kill capacity. The thing that we kick back around, and I'll throw it back to you or Eric, Zach or Eric, because you guys are from that region, is how much of this has been known and priced into the market already? We started 2 weeks ago with Southern Cash 235, traded down to 228. Bids were at 222, 223 earlier this week. Yes, we were able to put some dollars on, but in the grand scheme of things, capacity is not our limiting factor in the cattle market right now, right? The concern is what the economics look like for the consumer. Box loads were okay today, 61 on the midday. But what do you guys think that impact will have? And how do those cattle, will they move north and at what cost?
So I agree with you completely. And I know that was news that broke this morning. And I think it's kind of a correlation versus causation thing, in my opinion. I have honestly been waiting for a day like today, really all week. We've seen a lot of sideways movement, especially in the feeders, with cash, though slowing down, has still kind of stayed at a premium to the futures. We've got box beef that's continued to march on higher. And I really think that, again, maybe shouldn't say this, but I feel like that today was bound to happen regardless of the plant news. I agree that those cattle will find a home. I don't believe that kill capacity has been our limiting factor. I think that we've got a lot going on. I still think there's some question marks. Long term, we've got the fundamental question mark of herd size. That's something that's been spoken about a lot. I know I just saw that the JBS CEO recently said that he thought that the herd was being rebuilt, and that he even acknowledged that's something that'll take until 2027 to see. But weather lately has kind of favored some herd expansion. We've got to wait until next month to see what Cattle on Feed says in terms of breakdown of steers and heifers. But that'll be something that kind of will impact cattle futures in the long term. And then we've got the looming threat of New World screwworm. So there's lots of question marks there. And yeah, Justin, kind of to round back out to your point, I don't believe that kill capacity is our limiting factor there. But I think if we do start to see this happen on a large scale, and that's when we'll start to see some bigger impact of this in the market.
When the Tyson plant in Holcomb, Kansas caught fire, we went limit down for 3 or 4 days in a row, and we're going to shut this plant down due to a strike. So we're going to go sharply higher. This is a bullish market. Bullish markets look for any anomaly to go higher. And I think that's what we saw today. Everything ultimately is a derivative of the beef. So if we're going to limit the beef supply, there's going to be some trickle down economics that hit the cattle as well in time. But luckily, the market didn't give a knee-jerk limit lower because a plant's going to close. Yes, it's the largest in the U.S., but we have to look at what's been going on, what the chain speeds have been. Like you said, Zach, there's other places we can find a home for those cattle. So switching over to the other side of the livestock, Justin, what you want to touch on the hog and pig report that we saw yesterday, cold storage the day before that. This market's been really robust. What say you about this?
Yeah, as we we take a quick peek at the numbers here Eric's going to throw up on the screen. Nothing really stood out in that report to me as wildly bullish or not priced in, meaning the numbers weren't skewed to the bullish side, and we were fairly in close to the trade estimate. However, the 180-pound weight range was slightly positive. Therefore, we did see those front month hogs trade higher today at the end of the day. As we move forward, though, we have priced in a significant premium in these hogs. Now, the USDA did revise the numbers higher from the previous hog and pig report, and I did put it in the report this morning. I don't know what your guys' thoughts are on that, but if those hogs actually did exist, they probably died of PRRS. We're hearing PRRS very rampant from Minnesota down as far as Iowa. Some people probably have some clients farther than that south that are dealing with PRRS, but these 40-pound pigs, anything in the open market, has been just sky high on the feeder pig side of things as people try to fill barns. Also on the end of that, we have packers calling around looking for hogs, looking for anything that they can get their hands on. Integrated margins have been running $75 to $85. Standard packer margins $15 to $20. They are making money processing hogs, so if they can get their hands on those hogs, they will do that. Now, as we flip over and talk about what does that mean in the futures market as we move forward, we look at this market, and if you want to throw up like a December chart, Eric, we look at this market and we wonder where we can be. We've already taken bellies almost to $200. Will we get north to the 240s on the bellies? That remains to be seen. It seems like the funds have been ahead of this hog market this year compared to seasonalities. For example, in February, we had a really nice run. Now we're having a really nice run in June, when traditionally those runs start in July, or those moves higher. As we look at these December hogs, there was one thing to point out, and I've been bringing this up with clients. We have traded $90 December hogs a handful of times, but yet have never expired the contract over $90. Now, we've never traded $240 cattle either, so I'm not here to say that we can't do it, because we obviously did, and the protein sector is very bullish this year. But that is something to keep in mind as we move forward, either LRP or hedges, put options, whatever your flavor of choice is. That is something to keep in mind as we move forward.
Okay, well, I think that pretty well covers the major points, at least for what happened this week and what's coming up here a little bit. But wanted to talk briefly. Next week, we do have a holiday week. There's nothing going on Friday, as we have the 4th of July holiday. We have first notice day for July grains on Monday. Hopefully any speculative longs got out today before the close, as they will be subject to delivery come Sunday night. Any final thoughts from anyone about what we've got going on coming into next week?
So often, as a grain buyer of 18 years, I went home on July 3rd, either a hero or a zero. Markets rally on July 3rd. You look at that 4th of July holiday and you come back and you're just full charge. And more times than that, we go home on July 3rd. It rains over the long week, or the 4th of July, and we come back and we start taking weather premium out of the market. Now, is that different this year? I'm not sure. Funds already short, a couple 100,000 corn. We'll get the final numbers tonight. Maybe we take a little bit of a breather. 3-day weekends around the 4th of July scare me, because I've just been on the wrong side of that too many times. But the funds have put big bets on this crop already, and we're earlier than normal. Shuffle them up and deal. We'll see what next week brings, I guess.
I wonder that same thing about, is this year different because of 4th of July usually being an inflection point from higher to lower on the grains? We put some spring weather risk into the market, and then we take it out because we're like, okay, it's 4th of July. We look around, we feel pretty comfortable. We did catch that rain that we said we needed by the 4th. And so you see those traders in Chicago reacting to that. So will it be a flip where we get past the holiday and these places turn too wet, stay that way, and then there are other stretches that get the high pressure, and you talk about the heat and yield prospects, and it's like, let's put a little extra weather back into the market from that point. We don't know. I think it's interesting too, though, for the livestock talk about the time of the season and demand, and whether or not we see some waning of need for coverage. We know how short bought they were coming in to Memorial Day, and then how well that holiday went for meat consumption, and that they had to catch up. Well, did they, in those run-ups, those last run-ups to new highs really in this market, buy up enough for now getting past Independence Day. Those purchases have been made, and what's next? Is that part of the seasonal influence for the livestock that makes it a little bit different than all these other times? Cattle futures in particular have dropped so far under cash.
Yeah, hopefully we'll see a contra-seasonal upturn rather than the typical downturn after the 4th of July. But all remains to be seen, and we'll see how we started off Monday with those major data points from the USDA at 11 a.m. Well, that'll do it for this episode. Thanks, everybody, for joining us. Thank you guys for joining me, and we will see you next time on the CommStock channel.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.